Bitcoin as a solution to the debt problem. If Bitcoin climbs to 10 million USD per BTC, it could provide the world community with a stable currency, replace sovereign currencies, and act as a reserve currency of the world, incapable of inflation or deflation. It would represent the ultimate store of value. Is this feasible? Probably not. But we believe it is possible, and we believe it offers the greatest benefits with the least collateral damage to the least number of individuals, corporations, institutions, and countries. Most importantly, it would provide a permanent fix, a quality that none of the other solutions provide. This article is titled The Long and Winding Road to 10 Mil Bitcoin. We can picture that road. It looks something like this. Bitcoin and the cryptocurrency space is in total disarray. However, the journey of 10,000 miles begins with a single step. The first step was taken in the white paper by Satoshi Nakamoto. The second step was taken by those people who believed in the fundamentals of the concept. The next several steps were stumbles and falls with the introduction of centralized projects introduced as improvements to the original. To date, Bitcoin is the only completely decentralized concept which is distinguished by its absolute limit on supply. Bitcoin has no legal structure, no copyrights, no trademarks, no executives, no board of governors, no board of trustees, no executive committees, and no budgets. No one to change the rules, no one to inflate the supply. Bitcoin is open source and available to all. Bitcoin will never die as long as we can buy it from you or you from us. This is its great strength and Achilles tendon. It allows anyone to steal its genius without recourse. Over 4K projects have done just that. All of these projects have crippled the entire space. None of them provide what Bitcoin promises, nor can they. Bitcoin stands alone, but almost no one understands this. Not participants, not investors, not institutions, not regulators, not sovereign entities. Tiny progress has been made by the SEC, drawing a distinction between BTC and every other cryptocurrency. Too little too late? The damage has been done, and the tremendous promise has diminished, just as the markets have responded to the confusion by guarding the appreciation of market cap and price of all participants. We believe that the markets will recognize and embrace the uniqueness of Bitcoin, but not yet. The next big step on this journey will be the utter decimation of altcoins, ICOs, and the realization of the important attributes of Bitcoin. That process has begun, but the regulators must regulate. We believe they will. During this time, Bitcoin will continue to lose value, but at a much lower rate than its competitors, such as altcoins. At some point, this process will find a conclusion. Maybe this year, possibly next year, probably the following year. To us, this is all very clear. What is not clear, however, is what steps will then be taken. The rest of this article will lay out what the road ahead might look like for BTC to take a necessary role in this macroeconomic landscape. The road ahead. BTC is a market-driven asset, the most democratic market-driven asset in history. Its price movement is based on pure supply-demand economics. The supply is known as a known fixed quantity. The only variable in its price equation is demand. When demand rises, so does the price. When it falls, so does the price. Why did the price increase from pennies to 20k over 7 years? Demand. Why has it fallen from 20k to 3.2? Lack of demand. This is the quintessence of market forces at work. The corrosive consumer confusion is due to the plethora of competing stories, projects, alternative coins, ICOs, regulatory indecision, and the regulatory jurisdictions. This has become so intense that there are very few incremental buyers. The price will continue to deteriorate until this condition changes, until the opaque again becomes transparent. Let's stipulate that Bitcoin survives and the vast majority of competing projects do not. This antidote dissipates confusion. Adoption will quickly increase, individual by individual, as the fog of confusion clears. As a democratic, market-driven asset, Bitcoin increases in price with each individual decision to purchase Bitcoin with fiat money, such as the US dollar, AUD, and so on. The list of the pockets of wealth that we have included in the statistics above will one by one be buying Bitcoin. This will occur immediately after the bear market ends. We'll attempt to identify whether the significant potholes lie in the road ahead, and which pockets of wealth will help to pave over those potholes. What will the road look like ahead? Here's a roadmap, or here's our roadmap. When the final bottom is in, which we believe will be below $1,000, the road will be clear up to 6k. Above 6k, minor bumps are 7.5, also 8.5. The range between 10.1 and 11.1 will be the second major challenge. Above that, resistance will fall quickly. However, additional resistance appears at 13.75 and 17.5, as we saw when the price was dropping so rapidly, because there was not much resistance at those points in between, which will be tested and overcome. New highs above 19,666 remain the final barrier. At this point, the media will be frenzied. Price, full speed ahead. And that is when the FOMO is likely to kick in my opinion. Now the road is smooth, steps quicken, pockets of wealth come into play. Hedge funds, family offices, additional individual investors, those who missed out on the previous three bull markets, flood the market at a quickening pace. The capitalization rises, the dominance rises to 9% or over, speeding the deterioration of remaining coins, of other coins. Investor psychology quickly shifts from caution to certainty. 50 and 100k are temporary but significant hurdles. Momentum players of all stripes increase their holdings, further forcing latecomers to act. Pause here for a moment to consider BTC at 100k. At this price, the capitalization is 1.7 trillion. Where did the money come from? It came from the worldwide stock market at 73 trillion. It came from hedge funds with the assets of 3.1 trillion. Gold assets, 7.5 trillion, represent an important potential demand for Bitcoin. We believe that the single most important barrier for the price is overtaking the value of the gold supply. At 100k, Bitcoin begins to challenge gold as the store's value. We believe that the gold investors will not be reluctant to make this switch. Assets begin to move from gold to Bitcoin, slowly at first and then more rapidly. If gold investors are reluctant to sell gold for Bitcoin, its price will have to rise to roughly 400k to equal the gold stock. If we're correct and gold is sold for Bitcoin, this equilibrium will be reached at lower prices, possibly 200 or 300k. In a future article, we will examine how a gold standard is a solution to the world debt problem. A gold standard is a more probable choice for world governments, and thus the necessity of Bitcoin challenging gold cannot be overstated. If we have to wait for 400k to be reached, then demand has come from the cowboys. Those investors will with free hand in asset selection. Now the road becomes narrower, bumpier, with many twists, turns, and switchbacks, much more difficult to navigate. The pace will slow. Three things must occur at this price to continue the run up to 1 mil. First, the core developers must have delivered on the promise of speed, transparency, and cost. Already has been much accomplished. We assume that the developers worldwide will begin abandoning non-Bitcoin projects and return to the fold. The non-tech world must have confidence in the integrity of Bitcoin. Second, institutions must embrace it. Not in words, but in action. Fidelity will play an enormous role in the adoption, institutionally. It is one of the institutional giants. It has pioneered enormous foresight, innovation, and reliability to the financial framework we enjoy today. It has over 27 mil accounts, 27 mil investors, and almost 7 trillion AUM. Fidelity has taken great interest in BTC. Thirdly, regulators not only in the US but worldwide must make absolutely clear the distinction between Bitcoin and all the others. This accomplished, the road to 1 mil will smooth and straighten. The hurdles will be 1 mil psychological and financially. At 1 mil, Bitcoin will have a market cap of 18 trillion. It will be in the major league of asset classes and pockets of wealth. It will be a contender as the fastest growing asset class in world history. No longer be ignored by pension funds, sovereign wealth funds, institutional money managements, endowments, financial institutions, and even governments. This will fuel the trip at high speed to 10 mil. Is this a big jump? Oh, of course it is. Absolutely. Is it possible? Possibly as well. Why 10 mil? At that level, Bitcoin would provide a sufficient reserve to alleviate the world debt burden. Bitcoin would be worth between 180 and 210 trillion, depending on what the price is reached by then. Assuming world debt has reached 500 trillion at the time, remember it has grown 394% over the past 20 years. BTC would represent a 40% reserve against the debt. What would a Bitcoin standard look like? The Bitcoin standard by Saifedean Almas provides a detailed framework of previous reserve against sovereign fiat. The subtitle, The Centralized Alternative to Central Banking, indicates his major objective in writing this book. Ask yourself, who would then own Bitcoin? The answer, if we assume 10 mil Bitcoin is central banks, banking system, large institutions, and sovereign wealth funds, how did they get them? Bought from you when you were selling low and panicking. Why did you sell them? At what point were you satisfied with your gains? Each of us will be incented at various levels to take our profits. Each pocket of wealth that we have described has its own objective. The objective at this point for central banks is to save the system and keep their power intact. They only have 5 choices and none of them are good. This is their best choice. We will explore the other 4 in the next articles to examine why we believe Bitcoin is the best alternative of the 5. Do we believe Bitcoin will be the chosen? The wrong question it is. The right question, will there be a choice? Alternatively, will the economic disequilibrium force resolution? Probably default. If you wish to read the rest of the article above, you can do so by clicking in the description below. If you found this interesting and helpful for the long term, please leave a like, share, and subscribe to this channel. Also, let me know what you think about this video. And did you learn something? This is one of the reasons why I believe in this long-term growth and why 1K must be hit, in my opinion, before we go much higher. Thank you all. Have a great day and peace.